Yeah, morning all. I want to put a big March on your radar. I think rates are very much front and centre as they have been for a while. I think rates volatility, if you're looking at 3-month, 10-year swaptions, are really influential on the US dollar. And we've seen a bit of a rise in implied volatility there, and that's led to some outperformance from the US dollar. And that's something that will continue. If that relationship holds up, then the dollar could very much be in play there. Now, have a look at the repricing we have been seeing recently. July OIS, which is where the terminal price sits at the moment, or the peak rate, has moved up from around 482 on the beginning of the month to where we sit at the moment, about 527. That's about 17 basis points above the Fed's year-end dot plot projection. So that obviously is something that we'll be considering when we go into that March FOMC meeting. We have seen rate cuts coming out of the market. If you have a look at 3-month SOFR, you can see that has moved from around 60 basis points of cuts for the second half of the year to around 24. And that's something that we are very much focused on. We've got some data that comes out this week, personal spending, personal income, core PCE, FOMC minutes and those factors. But I think as we go into March, that pricing really becomes real. We're going to be looking at Jay Powell's testimony to Congress, and that, just after that point, then we got on in Australian time, the 11th of March, non-farm payrolls. The 14th of March, we got the CPI number. That CPI number is going to be a biggie. The implied volatility over that date across all asset classes is very high indeed, and that's going to be very influential. You can go across different geographies, and that may move the Treasury curve and those other factors. We're obviously watching European CPI numbers that come out on the 2nd of March. The terminal price for ECB is around 359. What's happening in Japan as well could have influence on US Treasuries and term premiums and those factors as well. But really for me, it's just about how markets trade rates volatility and this terminal price and rate cuts as we go into what could be a big March, as you can see here from the calendar. At the moment, the FOMC meeting is priced 28 basis points. We can see the next meeting in May, the step up's about 25 as well. And we get to a terminal price of 527. But given this data flow that we're going to be seeing going into March and how that sort of transacts, could we see the propensity for the terminal pricing to get above 530? Could rates vol move up, and how that influence things like the US dollar and, of course, things like the VIX and also growth equities as well? So one to put on the radar there.